The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 15 July 2022. Well, I'm here looking at a rather crude chart with Kitco, as you can see. And you can tell from middle of 2018 or so, we're still, if you connect the bottoms, in an uptrend. However, to be more specific, for the last year and a half or so, we're in a large channel formation somewhere around here, and I can't draw this freehand very straight, but you get the idea that we're in this channel with the upper part of the channel around 2000 and the bottom of the channel, we'll call it 1750. And if we go to a one-year chart from that 5-year chart, we could see that gold has basically found a bottom a few times right about the level we are at now. Does that guarantee that we're going to see this as the bottom? And the answer is no, we're not. However, it's possible, and certainly we're getting in what we consider the buying zone. Obviously, anything around that 1750 level has held as a good area from July of 2015 till present day. So I look at it as an opportunity. I know that people are frustrated. They think with all the inflation and everything that's going on, gold should be rocketing up. But there's usually a pause. There's that buffer, similar to what happened in 2008 with the financial crisis. Gold sold off, silver sold off, stocks sold off, houses sold off. Everything went down. Gold rebounded significantly, and so did silver. I expect the same thing this time around. Not going to spend much more time on gold. This came out on the 13th, and I'm doing this on the 15th. And on this article from CNBC, it talks about, gold rebounding after a one-year low. But then we had another day's trading, and it dipped again. So it's searching for a bottom. And all I can say is if you haven't invested in gold, now is a good opportunity. Would you put everything in here and try to catch the bottom? I would say no. But I'd also say you would be smart to start getting in at this level. And if you're at a higher price and you're frustrated, I just could only recommend to take a deep breath and hold. I think by the end of this year, we should be somewhere over 1900. I remember Goldman Sachs said early in the year, I think it was April, that gold would be at 2,500 by the end of this year. And that was Goldman Sachs. Take it with a grain of salt or not, almost the banking community as well as this private analysts are looking for higher prices by the end of the year. And I think that's almost a given. I want to switch to the macro picture right now. This is from McKinsey & Company, and I'm going to show you some of their charts. You could certainly look at that data this weekend, but this shows inflation in many countries has more than doubled projections in the past 6 months. And they have it colored here, as you can see. I'm certainly not going to read all these countries. See, Japan's really showing about 2%. You go to black, which is the United States and Mexico, you're looking at about 8%. We know the latest figures are about 9.1. And you look at Eastern Europe, Lithuania, Estonia, Latvia, Czech Republic, and all that, and you're looking at 10% or higher. Not good worldwide. Drop down here, rising central bank lending rates in 2022. And again, I'm not going to read them all to you, but you can get the idea. You can see these spikes in these in this display. And of course, the larger that it is, the more that the interest rates have gone up. You can look at the Eurozone, which is a basket case, basically, as Marty Armstrong keeps talking about. And of course, he's correct. And of course, even in the US and Canada, you can see they're substantial. And then you get into South America and you look at Argentina at 14%. No surprise there. Even Australia is over here at a pretty good rate. So the trend is continuing. And of course, for the real estate fans or not, real housing prices rose strongly in the OECD countries during the pandemic. And of course, again, it's color-coded. So if you come into the black here, looking at North America, you're looking at the US, around 22% or something like that. That's a pretty big percentage change. And if you go down here into the dark blue, Colombia and Mexico are actually at the lower end at this particular time. Regardless, what we see is a very large uptrend. I think this one chart's worth the 1 minute. You're going to see this, or even shorter, but from the World bank, we look at different sectors that are highly important to the human species, looking at energy, agriculture, fertilizers, look at that, metals and minerals, food, oils, grains, and other foodstuffs. So obviously they're all huge. Fertilizers showing the most. And I know that some of the commodities have come off recently, and people are saying that the inflation may have peaked. It may have. I think the trend is going to continue. And all trends, all markets go up and down. Even the inflation rate is going to go up and down. But the overall, I think, is still up for a while until we get a deflationary event. And lastly, nothing more important than energy, but if we just focus on food, as it says from this report from McKinsey, a brewing food crisis, the liftoff in fertilizer prices, along with the fallout from the war in Ukraine, has pushed prices for basic foods much higher. Since 2021, food prices have risen to their highest level since the United Nations Food and Agricultural Office began this index. Prices are considerably higher than they were in the past, and the past surges of 2008 and 2011. Of course, you can see it right here. And yes, they may be peaking here and come back down, but it's not going to come down much, in my view, and based on what we know, fertilizer problems, supply problems, crop issues, water issues, and everything else that goes into the equation of food production. So higher food prices, yeah, they may dip and go back up, or dip and come off slightly, but they are going to be much higher from this point forward. Something positive for the silver and platinum bugs that watch these weekly perspectives: silver and platinum, two precious metals that will be screaming buys when the dollar turns. This is from Money Week by my friend Dominic Frisby out there in the London town. And he writes, the metals are not going to stop crashing until the US dollar turns. I've been banging on about that for some time. I don't know when that will be, nor does anyone. But the US dollar action feels like a parabolic blow-off that you get toward the end of a bull market, rather than a creeping disbelief that you get at the beginning. And on he goes. So Dominic, thank you for the article in Money Week. Compliments to you and all that you've done over the years. I am going to be buying platinum in this range. I've decided I wanted to wait for 800, but if I live by my own plan, it's close enough to 800 to go ahead and start. I mean, it's half the price of gold. It's less than palladium. It can substitute for palladium in any instance, even though the mainstream press may tell you differently. And it's 15 times rarer than gold. It's just a lot of things. I think the risk reward is what I'm looking at primarily. The downside risk for platinum is almost non-existent. Could it go lower? Of course. But how much lower? Not much. When you look at the upside potential, especially being such a small market. And lastly, a lot of platinum was taken off the exchange recently. So I think there's something to the platinum story, and it might be a good timing-wise, to get into the market. Now I want to talk about the mining side of the business this week during the perspective. Redressing mine closure liability through the ESG lens. Good article here. Talks about South Africa here, and talks about South Africa endorses an $8.5 billion deal to phase out coal, developing sustainable roadmaps for lithium and copper mining industries. You need to read this article, understand it totally. But if you think it's hard to put in a mine now, and it is, with the ESG saying, reclamation needs to be done in all cases. And I agree with that. It's just that we don't think about it very often as far as the all-in sustaining costs. If you add on the cost of reclamation, you've got a lot higher all-in cost than you do if you just abandon the mine when you're done mining, which, of course, to me is unethical, but it does happen. This is a current example. It talks about, what it means. And, of course, companies that are aware that a failure to address these matters can be detrimental to their purpose, their reputation, their corporate values, the approach to risk management, and their relationship with host communities, investors, suppliers, customers, employees, and other stakeholders. So really, it's just bad practice to do this, and it's been less and less in the U.S., in Mexico, in a lot of jurisdictions. You have to do reclamation that brings the the Earth's surface back to what it looked like before you ever started mining. But again, that's not true in all cases. So with that mindset, you're going to see it, I think, more and more difficult to put new mines into production. Something that's bothered yours truly for some time is the silver in solar panels, and I really want it to be recyclable. And up until this news, I believed that it wasn't possible. I never give up, but up until now, there wasn't a way to do it. And this gentleman, this UVA professor, has determined a way to do it using a laser. Gupta says he can salvage silver for reuse. I'm sure it's being practiced now, and I'm sure they're just in the experimental phase, more or less. But thank you, sir. That is wonderful use of our resources, and I'll compliment you publicly for that. And I'll leave something here on Palladium. This is from Barron's, pretty well respected. Car repos are exploding, and that's a bad omen. Talking about Palladium being used in catalytic converters and how many cars are being repossessed. And so basically what they're saying here is that this might put some downward pressure on Palladium, because if there's not as many cars, then of course there's not as many catalytic converters. Pretty simple. And I'll close out with this weekly perspective, reminding everyone that we at the Morgan Report started a Substack account. So just go to substack.com and in the search bar type in the Morgan Report, you will find us. And this is an article by myself and John Forrest Little talking about the cow goes moo, the cat goes meow, blockchain is blockchain, and gold is gold. Trying to keep it very simple. You can read it. Well, a few graphics here that are kind of fun, and talking about, of course, Load. And again, full disclosure, I am an ambassador for Load, and I have put my own money into the project. By the way, I will be doing an update with Nick Proton very soon on what's taking place with the AUX and the AGX tokens. That's it. This is David Morgan with the Weekly Perspective. I'll be back with you next week.